Wow, things are not looking good for Gensol Engineering. I saw that their credit rating got downgraded by both CARE and ICRA. What's going on?
Right, it's quite a situation. CARE downgraded them to CARE D, meaning they're in default or expected to be soon, from a previous BB+, which already indicated a moderate risk. And ICRA also downgraded their bank facilities to ICRA D following lender feedback about ongoing debt servicing delays.
Ouch. So, what exactly triggered these downgrades? I mean, it sounds pretty serious.
Well, according to CARE, the downgrade was due to ongoing delays in servicing their term loan obligations. And ICRA pointed to delays in debt servicing and also raised concerns about the company's corporate governance practices.
Corporate governance? What do you mean?
ICRA said that Gensol shared documents about their debt servicing track record that were apparently falsified, raising concerns about their liquidity position and overall transparency. It's like, trying to hide a bad grade on your report card.
Oh man, that's not good. And didn't Gensol say they had plenty of liquidity?
Exactly. ICRA mentioned that Gensol had highlighted having around 250 crore rupees in liquidity and was even sharing no default statements. So the falsified documents are a big deal.
So, what's Gensol's side of the story? I mean, are they just taking it lying down?
No, they've addressed the downgrades. They claim the downgrades are due to a short-term liquidity mismatch that's improving with customer payments. They also deny any involvement in falsification and are setting up a committee to review the matter.
A committee, huh? That sounds like damage control. So they're saying it's just a temporary issue?
That's the gist of it. They're emphasizing their strong financials, like an order book of over 7,000 crore rupees, revenue growth, EBITDA growth, and profit growth. Basically saying, look, we're still doing well.
But the debt is still a problem, right? What's their plan to fix that?
Right. They acknowledge the debt. Their strategic plan includes selling about 2,997 electric vehicles for about 315 crore rupees and a wholly owned subsidiary for 350 crore rupees. They anticipate these actions will bring their debt to equity ratio down to 0.8.
Okay, so asset sales to reduce debt sounds reasonable enough, I guess. What's their current debt situation?
They mentioned that their current debt stands at 1,146 crore rupees against reserves of 589 crore rupees, making the debt equity ratio 1.95. They also claim to have reduced their debt obligation by around 230 crore rupees this financial year. Disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Gotcha. So sell assets, pay down debt, and hopefully get back on track. But what about this Blasmart connection that ICRA mentioned?
Yes, ICRA pointed out Gensol's business linkages with Blasmart Mobility, which is a loss-making entity that recently delayed NCD payments. This could negatively impact Gensol's financial flexibility and ability to raise capital. It's like being tied to a sinking ship,
That's a good analogy. So Blasmart's struggles could drag Gensol down. And what about Gensol's share pledge? ICRA mentioned that too, right?
Yes, the promoter's share pledge increased to 85.5% in February 2025. This, along with the declining share price, further constrains their ability to raise capital.
It seems like a lot of things are converging at once. Share pledge, Blue Smart issues, debt problems. It's a bit concerning, isn't it?
Absolutely. And ICRA also highlighted potential delays in contract execution, which could affect revenue growth and liquidity. They've got these large orders, but timely approvals and land acquisition could be challenges.
Delays can really mess things up. What about the EV manufacturing facility they're setting up in Pune?
That's another area of risk. ICRA noted that timely completion of the capex within budget and scaling up the offtake are crucial, but there could be initial stabilization issues and uncertainty in demand.
So it's not just about solar EPC anymore. They're diversifying into EVs, but that comes with its own set of challenges. It's like adding another ingredient to the mix that might not blend well,
Precisely. And let's not forget the competition. ICRA mentioned that the solar EPC industry is intensely competitive and fragmented. This can keep profitability margins under pressure.
Right, everyone's fighting for the same pie. Okay, so what are the key things Gensol needs to do to turn things around?
Well, ICRA said the rating could be upgraded if they demonstrate timely servicing of debt obligations for at least 3 continuous months. Basically show that they can pay their bills on time,
Makes sense. Actions speak louder than words, especially after the falsified documents situation. And the market seems to agree. I saw that their stock fell another 10% after their announcement.
Exactly. The market's reacting to the uncertainty and the credit downgrades. So to summarize, Gensol's credit ratings have been downgraded due to debt servicing issues and concerns about corporate governance stemming from falsified documents. They have a plan to reduce debt by divesting assets and are emphasizing their strong financials.
Okay, got it. This is all sounding more and more serious. I think our listeners would also be interested to know more.
Definitely, this is useful information for anyone following the company or the renewable energy sector. Oh, and if you're enjoying this discussion, don't forget to like, share, and subscribe to our YouTube channel for more in depth analyses.
All right, so Gensol's got a tough road ahead. Debt reduction, transparency, and execution are key. What else stands out to you?
Well, honestly, the whole falsified documents thing is a major red flag. It erodes trust and raises questions about the company's leadership and financial management. Like, how can investors trust their numbers if they've been misleading in the past?
That's a valid point. Trust is crucial in the investment world. This situation serves as a reminder to always do your due diligence and carefully evaluate the risks before investing in any company.
Precisely, and to regularly check in with the company's statements in order to ensure that your investment decisions are based on the best possible information. The story is still developing, so it'll be interesting to see how Gensol navigates these challenges in the coming months.
Absolutely. And for our listeners, keep an eye on Gensol's progress, but remember to consult with financial advisors before making any investment decisions. This whole situation highlights the importance of transparency and sound financial management in the corporate world.